All right, folks. Well, the City of Toronto have passed their property tax hike. Interest rates are a little bit sticky. Vacant home tax declaration deadline is slowly approaching. All this, your questions on episode 169 of the Wise Old Owl Show. Let's get right into it. Well, the city quickly approved unanimously to increase property tax in the City of Toronto by 9.5%. Little bit less than the 10.5 that the mayor was threatening to increase by, and possibly 60.5 if the feds didn't kick in any money. And you know, it reminds me back in the day, and I've been around a while, when the federal government introduced the GST at the time. We didn't have a GST, it was implemented I think in the early 80s, and they came out and said, we're gonna implement this GST for 9%, and everybody was in an uproar. And then they cut it back to 7, and everybody was happy. And it sounds like this is what's happened again. It was an interesting tactic, got everybody up in arms, and all of a sudden we're settling on 9.5. Now, I don't know if they did a core services review or not, but it sounds to me like they're not putting in a lot of effort to look at stuff that should be cut. And one area in particular is all these new bollards that are going up on streets, these plastic bollards that are kind of screwed into the roads, and they're trying to provide some guidance to drivers that need to turn wider on turns into side streets and stuff. Like, they're all over the city, and they look like an absolute eyesore. Many are broken, many are bent, some are just pulled off their sockets, and quite frankly, I don't understand the purpose of them. You know, all these white lines painted on near curbs to avoid sewers and drainage manhole sewers and stuff like that. Like, what's the whole purpose of all this stuff? Like, why don't we try to train drivers to be better drivers? Why don't we look at enforcement and look at ways to get people to spend more time keeping their eyes peeled for cyclists, for pedestrians, instead of spending all this money for no apparent reason? I couldn't help but laugh when I saw this post today, and it really just created the insanity of public policy in this country. And it was a post by a friend of mine, Rob Campbell. He's a broker in Guelph, and he talks about how he saw a receipt from BC where they're charging a sugar tax on sodas. So a kid pays a 7% soda tax on a pop, and this is the same province that's giving out free fentanyl to people. So you're going to tax kids for buying soda because it's filled with sugar, but you're going to hand out free fentanyl, which the taxpayer is going to pay. Like, this is starting to get insane, folks. Like, I don't know if it's just a bad week, but it's getting really, really weird out there. And it takes me to the next issue with this GC Strategies company that's involved with this Arrive scam. Like, everybody knows about this Arrive Can app that has ballooned in cost, and these people work in their basements in a cottage, and it's gone from like an $80,000 project to over $55 million, close to $60 million. And a couple journalists in Quebec from La Presse have identified that this company that was set up in 2015, just 21 days after Trudeau took office, has been involved in 140 contracts by the federal government for a total of $258 million. It's 2 to 4 guys in a basement pounding away that have no IT experience, and they're brokering multi-million-dollar contracts, okay, to the tune, in 8 years, of $258 million. Now, I don't know what's going on, but as a taxpayer, getting jammed at the city level, which is the municipal level, getting jammed by the province with sales taxes, getting jammed by the feds on income tax, enough's enough. Like, this is starting to get to a point where it's ridiculous. And, you know, I don't know what to do anymore. Like, It's just crazy. But interest rates, everybody was pretty excited and ready to celebrate that they're on their way down. And guess what? They've kind of stalled. Over the last week, we've seen them spike up. It's created a bit of a concern on the mortgage side because we're starting to see some rates being elevated again. We're starting to see some increases by some of our lenders. And it really is consistent with my prediction that we're going to see rates higher for longer. And even though we go into the spring market, it seems like what happened in the States and what's happening with unemployment up here, where unemployment's actually improving. Like we've had a surplus. And the reality is we're seeing a lot of public service jobs being filled, and that is not going to bode well for the Bank of Canada. They want to see inflation start moving down. They want to see some bad news on the job front to encourage them to lower rates. And when you see a spur of job growth, especially the government spending more money in the public service, they're obviously not making their point to the feds to say you got to start curbing spending. And if you're going to continue to spend and inflation is going to continue to run, we're going to be up at these levels for a while before we even consider any type of drop in interest rates. So as I've been saying for months and months, we should prepare for a very bumpy 2024. I don't think we're going to see any significant drops in the Bank of Canada rate unless we start seeing signs of recession. That means corporate job layoffs. We're starting to see Bell, they dropped 9% of their workforce last week, and we're seeing more and more companies do so. Cascades did so, I believe, in Cornwall. They dropped 310 jobs. So we're starting to see some businesses starting to feel the impacts of higher rates, slowing economy, consumer consumption is dropping, and it will start flowing through the process. You got to respect the lag, folks. It takes a while. And as I pointed out, it usually takes about 2 years for all these economic indicators to start feeling some pressure. And the Bank of Canada started increasing rates in March of 2022. So we're just about to hit that 2-year mark, and we'll start seeing the impact of the hikes start taking effect as more and more consumers start feeling the pinch. You got to remember, during COVID, a lot of people saved a lot of money, so they do have savings and cash. It's slowly eroding. Sadly, the lower income folks are feeling the pinch with the cost of food, cost of inflation, borrowing costs and rent soaring at levels never seen in quite some time. So we're starting to feel the pressure of what these higher rates are going to do, and it's going to filter through the market slowly. So I would kind of take 2024 as a year of just getting through it. Try to taper your spending, try to buckle down and get rid of those wants, focus on the needs as I've always been saying, and really focus on getting through this year. I think 2025 will be a better year. I think 2025 will see a further drop with rates, or a more significant drop than rates than 2024. And as I pointed out in December, I think we're going to be closer to 5 on the Bank of Canada overnight rate than 4. So I don't see more than 2 potential drops later in the year. So tough to live in the prediction business. I hate it, but it gives you some understanding of what we can be anticipating. And I know it's not good news for realtors who are expecting a spark and expecting a flood of activity, but we're still not seeing the inventory levels at the levels we anticipated. And we're still seeing a bit of a drop in values. We're seeing some sales activity, but that value is still trending downward. So, it is what it is. The vacant home tax declaration is coming up at the end of the month. I really want everybody to focus on not only making sure you do your declaration, but look out for seniors in your neighborhood. If you know of any seniors that maybe don't have Wi-Fi, don't have computers, don't have mobile devices, you may want to reach out to them and give them a helping hand. These are the folks that get forgotten from city officials. These are homeowners that have been homeowners for a long time. Some are immigrants, some are not very prolific and have that experience with technology. If you have the ability to help them out and maybe make the declaration for them by reviewing their property tax bill, the customer numbers there, the roll numbers there, they can make their declaration file, you'd be helping out somebody who really deserves it. Because, when these things come out, somebody always thinks that everybody has technology at their fingertips. And, my dad's 90, going on 91 in April. He doesn't have a computer. He doesn't have access to a mobile phone. And these are the folks that need help. So, as I put in his declaration, I'm thinking of all his friends that probably are in the same boat. So if you know somebody, a relative, a family friend that is in the same situation, offer to give them a hand. You'd be helping them out and make sure they don't run into any future problems where the city hitting them with a tax, that 1 or 2% tax that they're charging. I don't even know what it is anymore because it's just seems like it goes on and on and on. I'll leave you with that, and we will now go into the Q&A section. So tighten the helmet, the chin strap. Let's go into our Q&A, and we'll start with, what is the best strategy for a client facing a mortgage renewal in the next 90 days? There are a large number of people renewing, and they're dealing with a lot of sticker shock right now. Now, if you are coming up for renewal, we do have rates that could be secured up to 120 days, in some cases 130. So you could book a rate now for a closing or maturing mortgage 120 to 130 days from now. It's very important that you seek out assistance to see what options are available. The strategy right now is not necessarily to lock into a 5-year fixed. Because we are still at elevated levels with interest rates, the strategy is leaning towards a 2 or 3 year term, and that way you're not stuck in a higher rate mortgage in that second and third year if rates start coming down in 2025 or 2026. The variable option is also gaining some traction, where people that can stomach a potential high rate at a longer period of time before rates start coming down, they have the option to lock in at any time. So we are starting to see some folks considering this that have the capacity to pay that higher payment for longer and have that flexibility in their cash flow to allow it. Now, granted, everybody still has to qualify based on the stress test, unless, of course, you are in an insured mortgage and you can be qualified on the contract rate. So for anybody seeking out a renewal, give our office a call. We'd be happy to help you through the scenario and give you some options to think about. But the play right now is a 2 or 3 year fixed, or the variable that gives you that convertibility and that option to lock in at any time into that 5 year when you believe it's at the optimum point. Do you help homeowners that have been served power sale notices? Unfortunately, these circumstances tend to be very unique from homeowner to homeowner. We do help folks. In most cases, people that have been served the power sale have had a situation that has caused them the inability to make their payments. So in cases like this, if there is some equity and there is some possibility to help them, what we're trying to do is try to buy them some time so they could control the process of selling it, and that the property isn't going to be sold from underneath them. And what we do encourage folks to do is understand that if you are dealing with a lack of income to support the debt that you have, getting you more debt's not going to solve the problem. It could only give you a temporary relief to get you where you need to be. So you got to wrap your head around the fact that, listen, unless something drastically changes, like if you get a new job, if you've lost your job, if you're sick and you think you're going to get well enough in a certain period of time to get you back on your feet, let's understand what that time frame is, and you got to be realistic. And what I find is a lot of people don't like hearing the option of selling. They really think and they're hopeful that things will get better. And I'm a realist. I really try to point it out for people. We can help you, but understand that this is temporary in nature, and at some point you're going to have to sell this, and you're better to be in control selling your property and deciding when you want to leave than having somebody decide that for you. So if you do need help in this regard, please reach out to us. We'll give you a couple options to think about, and we'll try to put you in a couple different scenarios that you could really digest, think about it, and see what's best for you and your family. So thank you very much for that question. What is the best way to sell a property when the tenant in it will not vacate? This is becoming a challenge. We are seeing more and more investors that have experienced a negative cash flow crunch needing to sell, and the tenant isn't leaving, which causes a problem because buyers who want to move into that property want to have it vacant because they probably want to live in it. Now, the reality is you have to get that tenant out and negotiate something with them if you want to get the optimum value for that property. If you are selling a property with a tenant and you want to pass on that responsibility to the new buyer, you're going to need to expect to sell that property at a discount. And those discounts right now are quite significant. We're seeing some condos in the city of Toronto being sold for $40,000 to $70,000 less than market because the new buyer is going to have to deal with that tenant. And that's not optimum for people selling. So what I strongly encourage people to do is try to speak to your tenant. Try to let them know that you want to sell this property, it's not working out, and try to figure out what's best for both parties to make this an amicable split. It is becoming more and more so a challenge, and it's becoming very common. So I encourage people, try to work it out as best you can and try to see if you can provide an incentive, pay some moving costs, understand what conditions they may be under, see if you could find another property for them and cover some rent for a period of time to make it worthwhile for them. But these are some of the things you have to start considering, because the reality is a buyer who's looking to purchase something most likely wants to move into it. And if they have to deal with a tenant, it's probably not going to be at an optimum price. I think interest rates are going up and they misled the average person. What do you think? Well, I don't know who misled and who they're referring to, but as I talked about this earlier, I think we're going to see rates higher for longer. We are seeing some fixed rates moving up. I don't know if the Bank of Canada is going to be hiking any further. I think they've pretty much said that things are going to be at their, this is the peak. So I know some people have indicated that there may be a possibility, but the reality is they always leave that in there so they have an out if something dramatic really happens. But I do believe that we are in a period where we're going to have to withstand higher rates for a longer period of time, and just be prepared for it and understand that you have to get through the year, and they're just going to have to live with it. Like, anybody who's telling you rates are going to rock bottom to where they used to be is just blowing smoke up your ass. And understand that you should be dealing with folks that have experience, are giving you all the information necessary to make a proper decision, and giving you facts. Okay, like, there's been too many people that have pushed people into property for the sake of a sale, or a mortgage for the sake of a sale, and the reality is they're in a lot of trouble. And what I would caution people is deal with someone who's been around, someone who has experience. And I think it's incumbent on everyone to ask, how many transactions do you do to make you an expert? And if they're not doing dozens and dozens of transactions in this market, they're not busy and they're not getting the experience to deal with the current marketplace. So just be wary of who you deal with, do your due diligence, ask questions, and find out how long they've been doing this, and ask for referrals. Do some due diligence for your sake. So on that note, we'll wrap it up. I want to thank everybody. Be careful out there. Weather's starting to turn. We're starting to see a bit more snow, and be safe out there. So thanks for tuning in, and we'll see you next week. Take care.